One of the common question I get asked, Manish, how does the life insurance policies works in Canada? What are the different types? Do I even need to buy a policy for my kids? So today in this video, we're going to understand what exactly life insurance is for your kids. We're going to understand why even parents or grandparents even buy insurance for their grandchildren or kids, types of life insurance policies that are available, real life example of life insurance for your child, how much coverage you need. Should you focus on the price only? That is one important thing I want you to talk about. And should you even buy life insurance policy for your child? What's up everyone, my name is Manish and I'm an insurance and investment advisor here in Canada. As a broker, I have access to majority of the Canadian insurance company, and I specialize in helping Canadians to get the life insurance and investment advice from the comfort of their own home. So if that interests you, click on the link in my bio, book an appointment, and we can discuss. Now let's take a look at the today's video, which is life insurance for your kids. Now the very first question you need to understand, can you even buy life insurance for your kid? This is one of the common question that's out there, but yes, you can buy the life insurance for your kids. I'm going to show you the different types that are available for it. But before you buy a policy for your kid, you need to understand what is really the goal of buying the insurance. There are mainly two reasons. One is insurance itself. Second is investment. Now, in both scenarios, the discussion that we are going to have is going to be beneficial for you, but it really depends on your personal situation. It's going to be hard for me to cover every single scenario in 10 to 15 minutes. But if your primary goal is not insurance and just investment, then there may be some other ways where you can get most benefit out of rather than using this strategy. But let's take a look at what exactly this is all about, and you can decide if this is even good for you. Now let's understand why parents and grandparents even buy life insurance for your kids. The number one thing that comes is lifetime coverage and guaranteed future insurability. I have talked to parents who have gotten a health issues down the line, a diabetes or a cancer or another health disease, which make them ineligible to get any insurance policy for themselves. Because their parents have bought policy for them, now their family is potentially secure. Most Canadians live paycheck to paycheck, and this is very important to understand, is whenever any event of death happens in a family, the whole family shatters emotionally and financially, because there are extra expenses, there are multiple things to take care of. So if that person, if a single individual develops a health issues down the line and they cannot get a life insurance for themselves, it's gonna be very hard for family to survive from that phase. I have seen families who have taken debts in order to surpass that particular moment because they don't have money in their bank account. So very important thing to note here is that if there is any health issues, there is any profession issues, take an example, your kid goes to military or they become pilot, or they have a hobby of scuba diving or skydiving or anything, those things will make your kid ineligible to get insurance policy, or even harder to get insurance policy. So when you buy a policy for your kid, you are making sure that they have the insurance policy that you have bought for them, because you are now making sure is that your kid is protected, your kid's family is going to be protected down the line if there is any health change or if there is any profession that make your kid ineligible. Now the second point is building cash value. This is most important. I have to specify here, if your goal is about building cash value and you want to use that cash value for education purpose only, I highly recommend you to start doing RESP for your kid, because RESP will give you better return from the whole life insurance policy. So if you're maximizing your RESP and you just need something as a backup where your kid can use this money for any purpose, because remember, RESP is only limited for education, but this money you can use it anywhere that you like. So if that's the goal, building cash value, I'm going to show you an example. Number third is the affordable monthly payments. Now because they are kids, their insurance price is going to be very minimal. I'm going to show you an example, you'll get an idea, but because they are kids, the price is less. Number four is the intergenerational wealth transfer. You see, as a parent, we don't know what's going to happen next. We don't know if we'll be there when your kid will be married. We don't know really what's going to happen. So apart from the things that you are doing, maybe you're running a business, maybe from your salary you're investing money, you have investments on the side, you have real estate. Take an example is that you buy a policy for your kid that has $1 million coverage, for example, and down the line, god forbid, something happens when your kid is 70 years old, 80 years old, we don't know. So at that time, that death benefit will go to your kids, which is your grandkids. Now in that way, you're doing an intergenerational wealth transfer, so making sure your family name will be protected in the sense that they don't have to suffer any hard times. So you are making sure you're setting a stone of financial foundation for your kid and your family name, because you're making sure they don't end up in a situation where they have to take loans, where they have to struggle to get their day-to-day even basic needs. The last point is emotional peace of mind. Now I don't want to talk negative. We want to talk positive. We want to look at all the positive things, what exactly the life insurance is going to do for your kid and for you. This is also, as a parent, we have to prepare for what if scenarios. I have known a family who was hit by another car on a highway, and they lost their kid. Their kid was 7 years old. I can't really recall, but they never imagined that is going to happen, right? They are driving safely, but we don't know what's going to happen. So this policy, what helps you to do is, helps you to take time off to grieve. There is no way you're going to work to pay for your bills. So getting a life insurance for your kid also helps you to financially protect your situation in case if that happens. God's grace, it will never, I pray for it, but in case if that happens, you are making sure that your finances are protected and you can take time off, you can visit to specialist, funeral costs. There are going to be multiple things taken care of that time period. The last thing you want to worry about is the money. So this provides as a backup plan that will help you to take care of your family, yourself. But yeah, these are the 5 points. Now let's take a look at what are the different types of life insurance policies. Number one is term insurance. Pretty basic, everybody knows about it. I'll give you an example. Term insurance, basically term 10. So you buy a policy that stays for 10 years or 20 years, 30 years, or even 40 years, and then it expires. Whole life insurance policies, what happens in this policy is that these are permanent policies. That policy will never expire. So take an example, you take a policy of 200,000, for instance. You are going to make a payment, for example, for 20 years only. There are payment period. You can pay for 10 years, 20 years. After 20 years, you are not going to pay anything. The main benefit of whole life insurance policy is that it comes with a cash value. And if you want to take a look at what whole life insurance policy is, what are the numbers that you need to look at, I have created a in-depth video in this particular course. I'm gonna add more videos in it. This is especially for life insurance policy for a kid. The lesson name is decoding the whole life insurance, numbers that matters. So in this particular video, I have given you a real numbers, the things you need to look for in the whole life insurance policy. If you want to check it out, I'll give a link into the description. And the third option is the child rider. So take an example, you have a policy for yourself, and that's one thing I need to recommend. If you're looking a policy for your child, you need to make sure you have the policy for yourself first. So in your policy, you can add a child rider. This I don't really recommend, because the maximum sometime you can get is $50,000. It's kind of term insurance, but it costs even lesser than term insurance. But mainly I recommend to get whole life insurance policies, because I have known parents who have developed health issues, who have changed their career paths, and now they're ineligible to get the insurance, and that's why they are afraid of, so that their kid won't have to be in the same situation. So that's why the parents are buying insurance policy that never expires. I'm gonna show you an example right after this. So let's take a look at the real life example. I'm gonna give you a brief of the whole life insurance policy. If you're interested in term insurance and child rider, leave a comment and I'll create a video. So let's take a look at the real life example of the life insurance policy for a child. Now I'm going to pull up a number. There are different things to look for, but I'm going to give you a slight overview of the full video that I've created in the course. Now in this policy, what's happening is we have purchased a whole life insurance policy for $100,000. Now remember, whole life insurance policy can be structured in a multiple ways. You don't have to go with the price only. There are multiple things you can do. So just focus on what you want, what is your goal, and then we take it from there. So take an example of $100,000 per. So this is an annual payments. In this policy, parents are going to make a payment toward this policy for next 20 years only. After 20 years, they are not going to make any single penny. Their kids don't have to pay for anything. What is happening in this policy? In this policy, we purchase a policy of $100,000 every single year. The number of life insurance coverage is going to increase. So we started with $100,000. So after 20 years, it is $228,000. After, you take an example, 60 years. When your kid is 60, the same 100,000 is now $821,000. This is an example of a whole life policy, and this is the cash value that is growing. Now let me show you a quick number. So this is the annual payment that you're going to make for next 20 years. So in 20 years, the total amount that you have paid is around $30,000. In 20 years, the cash value you have is $31,000, and the life insurance you have is $238,000. And after that, you're not making any payment, but still the life insurance coverage is increasing. The cash value is also increasing. There are different examples that I've shown in the course. So if you want to look at what exactly I'm talking about, do check this video. It's going to be really helpful for you to make a purchase for your kid. How much coverage you actually need for your kid? See, the one thing that I want you to focus on is I often recommend parents to calculate what is their monthly expense and time that to 6 to 7 months. Because God forbid if something happens, it's impossible for you to go to work during that period. You may need to visit specialist as well. There are funeral costs, there are other things. So minimum that I recommend is 50,000, but the most preferred coverage that I feel should be that parents should take is at least $100,000, because you don't know what expense gonna come in, and you don't want to touch your emergency savings during that time. So you need to make sure minimum 100,000 is there, but 50,000 is also a good start. Now the second last thing is, should you focus on the price only? This is the most important part I need you to focus on, is the whole life insurance policy. It can be structured in different ways. I'll show you an example. So this is the policy that we looked at. In this policy, you're making $1,500 as a payment. You're making it for 20 years. And this is the after 20 years, for example. So let's take 30 years. After 30 years, the total life insurance is 336, and the cash value is around $60,000. This is the second example. In this policy, you are making total payment of $1,900, but in 30 years, the life insurance is 469 and the cash value is 82. You see the big difference, and you don't need to really focus on the price, but you need to talk with your advisor. And this is how I operate, is what exactly are you looking for? What is your budget? And then I can recommend you how this needs to be structured. Because if you fall for the price, you may end up buying something that is not even beneficial, and with just extra 20 or 30 bucks you could have gotten a better thing. So you need to work with your advisor, see what exactly you are looking for, and they can recommend you a product. While working with me, because I have access to majority of the companies, I can even recommend you which company is giving you the best price. Now, should you buy a life insurance policy for your kid? Looking at all the things that we have discussed, the guaranteed insurability, cash value, if you're maximizing RESP for your kid and you want something second investment, this is something that you need to focus on. You want to leave a legacy, you want to build something for your family name, you want to transfer the wealth across your kids, grandkids, this will be the best option for you. Now, if the goal is only investment, then there are other ways to look at. But if you want to make sure that your kid is protected and their family is protected, then this will be the best option that you go with. If you have any questions, leave it in the comment. I'll try my best to give you a reply. Till then, take care.